2020, and it's 20 minutes past 10 a.m. in London when we're doing this market update. We're going to take a look at the markets as we usually do at this time of the day, and we're going to begin by taking a look at the euro, then GBP/USD, dollar yen, gold, crude oil, DAX 30, and the S&P 500. If you have any questions, you can just put them here in the chat box, which you can see here to the right over here. And in the chat box this morning, we have Maurizio. Good morning to you, sir. Thanks so much for joining us. If you guys are joining me as well, just want to say hello. You're most welcome to do that. Don't forget as well to like the video and maybe leave a little bit of a comment after we're done here. Okay, good. Let's begin. And yesterday was a bit of a tricky day in stock markets because we had that initial sell-off in the Japanese stock markets, and then that continued into things like the DAX and the S&P, which unfortunately traded below my trend finding levels, but then just bounced back upwards. The euro sort of is pretty much where it was yesterday. So what I've been doing over the last few days with the euro is actually quite straightforward, right? The market's been bullish, right? And then we said if it goes down to 110, which is level here, I want to be bullish. And then we're bullish from 110. The market moved against us, but did not trade below the trend funding level. Went in a bit of a profit, and then went back into the buy spot again, which is this blue area here. Now we're still above the trend funding level, which I defined as 108.94. And if we look at this today, it looks like we're stuck in some sort of a wedge. And I think, well, there's not much thinking going on. I will continue to be bullish. And if we clear everything here, it's quite clear that if we trade below, this level here, we would sort of properly leave behind this little area. And we might go down to 108.50, maybe 108 eventually. So I'm going to remain bullish for now. Now, if you look beyond here, I don't want to confuse you guys with too much, but if you look beyond, what do I want to see to be much more confident that we're going to trade higher? I would like to see the break to 109.70. So if you're on the sidelines, there are different ways to do this. For example, if one is long, there's not so much to do than just waiting. But in the short term here, if one is on the sidelines, there are two strategies. One is go with the bullish view, which is effectively looking to buy now, stops just below the low. The alternative is to wait for a break to 107 or 109.70, which is this level up here. If we take that level out, I think we would have left this behind and we would end this wedge, which because of this overall situation is actually a bullish pattern. And it does suggest that whenever we trade outside of the wedge, we can have this sort of move. So again, break to the upside is 1, buying on dips if you're super bullish is 2, and if you're just bearish, well, there's a few combinations there as well, but the one I prefer is to wait for a break to the downside. And if you're super bearish, you think like, come on, this is not gonna go up, then you could potentially just be bearish below 109.70. So you got a ton of different ideas here, but my main idea is to continue to be bullish because we're still above this low. GBP versus the USD, it's been very resilient. We reached these highs on March 27th, and this looks a little bit to me like some sort of a ascending triangle to some extent. And difference between these levels here, give you a target about maybe 189 pips or so. And if we do take out here, we can probably go higher. It is quite clear, even if we don't have this pattern, that if we take out these levels here, we can have a bit of a squeeze to the upside, okay? This might even be it's not an inverse head and shoulders, but you got a bit of a head, maybe left, a bit of a right shoulder, and a neckline that goes like that. But it's definitely bullish, and maybe this would be the trigger point. The other thing would be to be bullish on a corrective move, which is really my preference. So I'm bullish above 119.29, which is this level here. And the idea has been to wait for that pullback, and I've been waiting for that for quite some time. But it's not really working out here. And that's my little boy you can hear in the background. So with the nurseries closed in London, he's staying at home. Yeah, so this is a downtrend in dollar yen. And a few days ago, we said look to sell here, and we went down. And then we said also you can sell on the break here, and we said you can sell on the corrective move, which is up here. That the idea was to sell up here. We got that really good. The market went to our advantage. We're down lower now. And if I look at this today, this is a good opportunity to book a bit of profit if you wanted to. And then if we swing up to 108.13, the idea would be to sell again with stops above the high and then go back to the low, but eventually lower. According to the pitchfork, this is the pitchfork that has been dominating price action since I think January 2017. Of course, in retrospect, you can do these. In 2017, I would not have been drawing a pitchfork here. They make sense when you have maybe a bit of data and then you can add them on. So what it does tell us, I mean, the market pretty much reversed perfectly from the high. We're pretty much back into the midpoint, and it does tell us, okay, we can swing up, but as long as we cap by that trend finding level, which also happens to be this line over here, then we could potentially trade all the way down to the lower boundary at 103.57. Now let's take a look at gold prices. So gold prices, if I just get rid of everything here for a little while, you can see that we're dealing with a big uptrend, right? So the idea was to be bullish from down here a few days ago, and the market rally then give us the first bit, and that worked out really good. So that was a success. Now then we said, okay, we're trading, we can potentially be looking to buy here, very tight stop loss. Eventually that actually failed, and yesterday I said look to sell on a correction, and that is actually in play, and I think we're up a little bit. Now the biggest challenge with this, as I already explained a few days ago, is that we are dealing with an uptrend, and the uptrend is bullish, but we're so far away from support here, and the market declined a lot and rose a lot really quickly. So so it's a situation here where there's no strong bias. Now if you look at it from a slightly short-term perspective, it does look to me that it wants to maybe correct a bit, so it's really strongly, and then it wants to give up some of those gains. And that's why I said yesterday that probably between 1597.62 and 1625, I think people will probably try to sell. But yeah, so I think people did sell here, of course, and we can go a little bit lower. But the whole structure here is making it a bit difficult to actually trade. Now crude oil prices, they're actually doing okay. So crude oil prices, we had some decent success here. You know, we talked about, I think we talked about selling up here, talked about selling here, and then we also talked about selling here, and that went also good. But at the end, like with everything, yeah, things end, and the very short-term downtrend ended yesterday. When we took out this high, sorry, it ended this morning actually. When we took out this high, in the very short term, the market stopped trading lower and lower highs. That means that my system is now neutral, and maybe this is it. Maybe we're just gonna roar back up higher. But the problem here is that we're dealing with this short-term trends and longer-term trends. So if I just do like this, sorry about that. Let's see, if we do like that, you can see you have a high here, you have a high here, and a high here, and a high here, and a high here. And what's happening is that we have smaller highs like that, and this was a little downtrend, this was another little downtrend, and this was also downtrend. This as well a little downtrend, and this was a little uptrend. So you have the failure of this one now, and we had in the past the failure of this one. But we still have this big picture one to some extent. I mean, actually when I draw it, it has been broken, but trend lines measure two things, the direction and the speed of the direction. And as you see, I don't draw too many trend lines. Why? Because for me, what's important is the actual pattern. This is interesting, this sequence, and this is the last level. So it could be we're just gonna go up, and then we're gonna come down, and then we're gonna go up again. So I want to wait, I want to give this a bit of time. Now if you're ultra bullish, maybe you'll buy down here and then push the price to the upside, try to do that. but I would like to wait a bit because I suspect that we could still be dealing with this one capping things. Okay. What else? German DAX. This is the German DAX. German DAX, the idea was that we're going to be bullish about this low. The market traded below that low. And we didn't really have the reaction I thought we were going to have, which was for a steeper decline. So that looks to have been a false move. So for now, I'm working with this level here, because if we indeed go below this level, we would have created a new lower low. And here we're dealing with a bit of a rectangle before, rectangle pattern, where you had, you know, a break to the upside, a break to the upside like that, bullish, and then break to the downside, bearish. But you can see the market traded below, and it didn't work out. Last time we were so close to support, but in fact the market went perfectly up to the level we wanted to see. So for today, it's quite straightforward. I will remain bullish about this level, but if we trade below, we'll probably go down a bit. And this is the S&P 500, where we had a very similar situation, where, as you know, the trend has been bullish and bullish and bullish. We said buy here, that we're fine. I said buy here, that we're also fine. And then when we went down and wanted to buy here the next time, we had lifted the stop loss to this level here. And then you can see that the market traded below that level. So we were stopped out of that view. But looking at this today, after a good night's sleep, we can see that, well, that level was not well placed. And sometimes that happens. And if I'm looking at this today, I mean, technically the trend is still bullish about 23.91, which is this big level, which is more important than this single one. So I'm going to be bullish for now. And I think if we can go down a bit, but then probably going to go be upwards. Is it fragile? Of course it's fragile. And today we have initial jobless claims coming up. And what's happening with that is that last week we had 3.5 million people that apply for unemployment benefits. This time around, people are again anticipating that's going to be about 3.5. So you're looking at potentially 7 million people that have been made redundant and lost their jobs actually over the last 2 weeks. And why? Well, because we have the idea that everybody needs to stay at home, which makes perfect sense. And then we'll see. Again, I said it many times before, if people stay home for 1 month, maybe 2 months, I think things are going to be okay. The question is how long we're going to stay with no work. And that is the challenge. If we look at the numbers, things are looking okay. And I think that maybe with a bit more testing, I think we will have at one point in places like Italy, for example, the ability for people to go out and do their business. They're not sure how they're going to solve it though. Maybe they're going to say, okay, you know, people of a certain age can go out. I'm not sure, actually. I'm not an expert, but they're probably going to do something about it at one point. I think in Italy, maybe looking at another 2 weeks, and then there's going to start to be talk about people being able to go out again. Let me explain to you why. Well, Italy was the first one to get into huge trouble following China, and they were the first one to lock down. So they locked down here on the 9th, which was when we're trading up here. You had a 27% growth of cases on the 9th. So we got these numbers here. Sorry, 24% on the day of the close. The day before national lockdown, we had 25%. And you can see how the numbers have drifted all the way down to 5% growth rate. And over the last few days, we've been even down at 4. So things are looking good here. So maybe if they wait another 2 weeks, they'll be hopefully down maybe 2.5%, maybe 1%. Maybe they're going to be like China, close to 0% for a few days. And they can start to open things up. They just need to think ahead and try to figure out how they're going to sort things. One way they do it in many countries is that you need to measure your temperature before you go in. Like in China, when you go into a building, they measure your temperature, making sure that you don't have fever. You know, people use face masks sometimes. Well, I think actually most of the time. And there's a general checkup in general. And if you're sick, you need to go home. So they're sort of back at square one, but much better controlled. Maybe that's going to happen. So things are going good in Italy. In other countries, it's not, and in the US as well, actually, it's doing really good. This is the US. So the growth rate in the US is 14% right now. But up until recently, you know, they were lingering around sort of 36% growth rates. I mean, when the market was at the lowest, the growth rate was at 51% in the US. And then since then, you can clearly see here, I mean, anybody that knows a little bit of technical analysis, that this is a nice little downtrend. So we're definitely looking at lower levels here for the US. Some other countries are struggling though. I mean, France is going in the right direction, but they had a bit of a rise in the beginning of the week. Now we're back at 9%, which is a good single digit. So it's going down, but it's going a bit slowly. You have countries like Germany, which is around single digit at 9%. But you can see this is not like a clear change of the trend. We're just lingering around the lows. Maybe they need to push a little bit more to properly break this down, and we need to go below sort of 7% to be able to talk about a significant change. Italy we talked about. The UK as well. I mean, things are going in pretty much the same levels, and unfortunately we're around 14%. And what happens here when you start to go more than 2 digits, things rapidly turn more and more aggressively, because and that's a problem. And then you have the US, which has done a really good job. Spain, things are going as well in the right direction, but I think they're moving a little bit slowly. Again, 9%. Here is 20%. So we need to see this go lower. Probably need to see more testing, like people that work in hospitals and stuff like that. They're not always being tested. There's high risk that they could die, but also expose people with fragile underlying problems. So there's these issues. But overall, on my weighted indicator for all these countries we just covered, with the exception of Sweden, which I don't include in this index, we're going in the right direction. But things have stalled a bit. Daily growth area is about 10%, and it's been at 10% from March 29th, which is Sunday. So maybe by this week we'll go below that 10% level and we see better situation. And then we'll see what happens. If things go back to normal, of course, this is a very good opportunity to get involved in the longer term, for example, in stock markets. And I think volatility should diminish, but you never know with the second round effects. You know, companies that were fragile, they hire a lot of people that might be forced to close down and things like that. Okay, let's see if you guys have any questions. So we'll begin in chronological order. Stefan says, can you please take a look at the dollar CAD? It looks like it finally has topped. Okay, let's take a look at the dollar CAD. Dollar CAD. Yeah, so this is the dollar CAD. And I was bullish at one point above these levels here. Then that idea was stopped out. And then we're looking for a strong corrective move. And we reached the sell zone here a few days ago. Went to my advantage. And then we moved up to my sell zone again, which is 142.44. With crude oil prices increasing, you know, this is the Canadian dollar is getting in a bit of a support. And for now, I'll remain bearish below 143.61. And if we swing back up again, I think people are going to sell again. You just need to be careful. Because if we look at this from a bigger picture perspective, you know, it might be a corrective move here, and then we take out this high. So if things turn really bad again, we're probably going to break above the high here again. But for now, it looks like it's going to go down lower. Good question. I'm not a PE expert. I don't actually watch the PE level on a general basis. But I think many times what happens is that, I guess, maybe the earnings collapse, and that gives us higher PEs potentially. The PE ratio is if you don't know, guys, is the price over earnings. So if the earnings go down, your ratio should, I guess, become bigger. It really depends if your earnings collapses more than your price. Good morning, Vincenzo. Hope you're doing good. Paul Owen, good morning to you, sir. We have BNN. Good morning. Any news? Any say on the GBP pair? Seems to be going strong. Euro GBP. Yeah, I think just by looking at this, we can clearly see sort of the pound is doing really solid, and I mean the pound has not given back any of its losses, or any of its gains, and the euro, as you know, is under a bit of pressure. So let's take a look at Euro GBP. Euro GBP had such a roller coaster ride, though. It has a crazy ride. So this is interesting actually, because I mean it's been a while, really wild. So what happened here? This is a weekly chart, so we're trading sideways between 82.69 and the 2016 high and 2017 high and sort of the 2019 high of 93. So we're trading sideways there, and at one point we were about to trade lower. That would have kickstarted a major decline. But then what happened is that the pound, the euro initially, because it's like a safe haven currency, saw a big boost. But then, as you know, the dollar sort of gained so much because there's about a half amount. So US GDP is about $21 trillion, and there is half of that, or an amount that equals half of that are available in loans. So you have all these foreign banks that are allowed to issue dollar loans. So they issue loans in dollars. And they do that a lot to sort of Southeast Asian countries, but also emerging market countries. And all these people have exposure in dollars. But when they make money in their local currency. And what happened here, everybody looks to have rushed to hedge their positions. And that caused that massive move in dollars. And that lifted this up now. But if you look at this today, we're sort of returning a bit back to normal, I guess. Where the price is just giving back some of those gains. And is there any specific situation here? I'm not really sure if there's any specific fundamentals. I think it's more technicals driving this. I mean, the way things are looking right now, you know, what's up with the Brexit negotiations? You know, will Prime Minister Boris Johnson be forced to change the law so they don't exit without a trade deal by the end of the year? That could be something. Or are people sort of seeing issues? I mean, some of the thing actually, when we think about it, as the ECB has pledged to pump sort of a vast amount of money into the system, that could be actually what is driving here, because they're buying bonds with freshly printed money, and that sort of increases the circulation of euros. So that could actually be something that is actually driving this. It's very difficult though to say how long that's going to persist. But we can always have a technical point of view on this, and the Euro GBP is moving lower, and it will probably continue to trade lower as long as it's below 89.91. And if we flip to a 1 hour chart, we're stuck in this very sweet little downtrend on the very short term, and you know, we could probably just, this is not the best way, but we can, we'll see a swing up to 88.36, and we can probably lower the trend following level a bit, like that. So the idea is let it swing up, and if we can, we sell a bit. It's not always, it's usually not a good idea to put stop loss at the closest high, so we put it at the high just beyond the nearest high, and then we can see this go down a bit more. But the way this looks like, it will probably try to go down further. Maybe it'll come down to 88.67 or something like that, and then we'll see what happens. Dr. Pamphilo, hi sir, can you please take a look at pound yen? Sure, let's take a look at the pound yen. Pound yen. This is just an old setup. We're trading in a nice little rectangle, bullish or bearish. We had that bearish decline. Okay, so looking at this today, let's take a look at it from a weekly time frame. Weekly time frame, I think we can put a pitchfork on this one. Actually, I'm not sure we can. See if we can try it. No. Let's forget about the pitchfork. The pitchfork is not always applicable, and today it wasn't. Okay, so if I look at this one, so what has happened here is that you had that break, and then now you have a corrective move. And you still have some currencies like dollar Mexican peso, which is down with 30% from just a few weeks ago, and it was down with like 37% at one point. And this is also like an exaggerated move. Now, my view is that we'll see higher stock markets. Things are probably going to progress better. That's what I think is going to happen. And that's why I think we can actually see higher stock markets. And maybe this is going to go higher because we have that less of a risk. Now, if you look at this today, there's not like a very nice and very sweet pattern to work with, unfortunately. There is none. We only have a bit of an uptrend in the very short term above 135.24. If you look at this from this big picture perspective, yes, it's obviously bearish. And maybe that will prove, maybe that's going to last. But again, I don't really have a very strong view here, except that I think it can go a bit higher and you have that little short-term uptrend. But I wouldn't allocate any money to this right now. Okay, we're going to wrap things up. Guys, thanks so much for watching. If you do have any questions for me, just put them in the chat box. Actually, don't put them in the chat box because I don't look at the chat box during the day. But you can always follow me on Twitter. Just search for, I'm going to give you the link actually, so you have that. So let's, the Twitter is the best way to keep track of what I'm up to. I've been using this Twitter for many years. I think it's in 2011. So it's a very good way to keep track of me. You can see all my different updates. We did just share the Q2 report by Investing Cube, so you can just check that out when you have time as well. If you're a member, you can just click here and actually download it. Okay, guys, have a great day. I want to thank you so much for watching. If you do have any questions for me during the day, you can most welcome to ping me via WhatsApp on Twitter at AlexFX00. Have a great day, guys, and I'll see you guys tomorrow. Thank you.